Bet. All right. Now we're recording. Okay, cool. So yesterday, we had went over structure a little bit more. And so the way that we're probably going to do these sessions is in the beginning half of the week, we're going to talk about structure, fib, order block. Later on in the week, we're going to pair together fair value gaps and liquidity. I see that when people are learning, they are kind of jumping around between all the five confluences and then kind of not understanding the priority of what you need to know first. And so, of course, is what we're going over today. Structure, fib, and order block are the first three confluences that you're looking for, and those have to be there in that order. You have to identify a structure, you have to draw your fib, you have to make sure your order block is in the zone. The other two, you do not necessarily need them in a trade. However, the structure, fib, and order block, they have to be present, right? In this call, I'll also discuss swing highs and swing lows, the difference between that, valid highs, valid lows. It's not too complicated. However, it's just understanding the concept that we can have ranges within a range, and I'll show y'all. It's pretty simple. It sounds complicated, but it's pretty simple. All right, first things first, right? Your time frames. Again, we know that each of our time frames are going to have different structures, right? Click on the 3 minute, we were bearish in the morning. Now we break into the upside in the evening, right? You're going to see that pretty much on each time frame. However, there's going to be, the smaller the time frame is, you're going to see higher highs and higher lows at a much frequent rate, lower highs, lower lows at a much frequent rate. And as you keep clicking up your time frames, right, the chart gets clearer and clearer. You're not getting as many higher highs and higher lows. You're just getting that one move. All right, if we're bullish or bearish, we're just getting basic moves to understand what we're doing. Now, again, just covering the basics. We understand that the higher time frame trumps everything. So if I see something, if I see on my lower time frames that we are bearish, right, which currently, if we look, we were bearish, we were breaking lows, right? I'm understanding that truly we are in an uptrend. All right, well, we're actually in a sweep right now. But even then, this sweep just pulled back to this order block. And so we're fighting two different trends right now, to be honest. We're fighting this sweep to see if we're going to break this and go to the high, or if we're going to break this low. Liquidity sweeps are powerful, but we play structure first. And right now, structure is saying, let's see, I'll break to this order block, push off. We'll see, actually. Currently, we actually have to wait for more structure to form. It would have to clearly give us something. We would have to break above these highs, or we would have to break below this low. That's something that we would wait on. But understanding structure, higher time frame trumps everything. So if I'm seeing this on my higher time frame, that structure is a little bit funky right now, I'm not even going to be looking for an entry on these smaller time frames, because I understand that nothing is clear right now. When you want to enter in a trade, you want these smaller time frames to break out and align with this higher time frame. Now, liquidity is easy to spot, and I'll just touch it just for this 1 second, but I'll stick to structure, fib, order block. These are relatively equal highs, right? If you draw a line, I would even include that, to be honest with you. Go back to our lower time frames. Look at all these relatively equal highs. So this is pretty much how you'll mark it up. We're not breaking this high. We keep faking out or sweeping, pushing up, sweeping, pushing up, sweeping. We're not breaking these highs, right? So going back to understanding structure, right? If we were looking at this, just this current piece on the 3-minute, right? We were bullish, then we started breaking below, right? So this would be this set range right here. This set range from 6 p.m. to about 8:30 currently. We broke to the upside, then we broke to the downside. So if I highlight this,
Can I borrow your? Can I see this really quickly? I just need the link for the guy to get on call because I don't think it notified him yet. I just need this. Is there a way to like?
Telegram.
Yeah, but I think it's gonna pop up over here. Let's see. Okay, thank you.
Mm-hmm.
Okay, there you go.
Cool. All right. So within this segment from 6 p.m. to 8 p.m., this would be our range on a smaller time frame. Now, as we click up, we're going to understand that currently, right, we are in a pullback. But right here, it looks like we have, just structure that's forming. We were looking for buys earlier for our entries. Now we'd be looking for sales based off of this 3-minute structure, right? So our range on this time frame says, okay, we have some buy opportunities and then we have some sell opportunities, right? But on my higher time frame, what I'm actually looking for is a pullback to break these highs. So me personally, right, even though the smaller time frame is showing me, okay, currently we're breaking lows and maybe we can catch a pullback to the downside, the move that I want to catch is breaking this liquidity, right? Only reason I'm talking about liquidity right now is because it's kind of present in my face. I'll pull up another example where it'll just be a little bit cleaner what I'm trying to show. But just currently where we're at right now, this range on a 3-minute is not something that I would take, right? Because I understand, all right, this is a pullback. Now, why is this important? When we come to understand structure, right, we know that we're going to have higher highs and higher lows. With this, right, if we were bullish, the continuous break to the upside is what justifies the trend. So we would know we're going to get into a buy based off of us making higher highs. The lows don't matter, right? And we don't know how far the chart is going to pull back, right? So we could have something like this. We can have something like this. We can have something like this. But this is consistently breaking and making new highs. However, these lows are inconsistent. So if I'm looking at my 3-minute, right, my higher probability is not to trade this pullback. And the higher time frame will show me that. All right, we're really just in a pullback right now. Well, this is a liquidity sweep, right? Probably going to chase an order block, and then we should shoot off, right? So that's kind of understanding. Okay, let's just scroll out on the 3 minute and let's see. Okay, if I was to mark this up as ranges, instead of looking at structure for like the higher highs and higher lows, looking more at the total range, or this is where we get into our terminology, our swing highs and swing lows, right? This all just looks like a downtrend. Oh, let me change this to something better, right? This just looks like a low. And this looks like, all right, trying to make a new high. We had some consolidation. Right now, what we should get. Now let's see if our higher time frame matches with this. Oh, like that. Zoom in. Y'all see this? This is perfect, right? If I'm drawing my fib, understanding structure, right? I got higher highs, higher lows. This is my previous low, my newest high. Notice we never broke below this low, right? Meaning if we're not breaking the low, we are still in an uptrend. The lows have to break. Right? Now, Aaron, why wouldn't you count this low as being broken? Well, technically, you could, right? You could say, okay, yeah, this low is broken. We pushed below this, right? But we have to understand this was actually just a liquidity sweep. So yes, I could have caught the sale, but if I'm drawing my fib from my previous low to my newest high, what is this actually doing? This came down and touched what? The order block on the 1 hour, right? And I want to play the trend. What is the trend? We are clearly bullish, right? Now I can catch some bearish plays in here in this particular range, right? I'm going to highlight this. I don't want to mark it up too crazy so it gets confusing. But let's just identify this particular range, right? Well, let me erase. Dang, why is that let me? There we go. My tools. Where is that circle at? There we go. Let's identify this particular. Well, maybe a rectangle would be better for this. There we go. This particular range. Dang, my colors all over the place. Right. But we broke this low. But based off my fib, we know that we're just chasing this order block. This would be considered liquidity, which we'll get into later on in the week. But this low from playing structure broke below. So let's see if we had any entries at that point, right? So right here, nope, that's consolidation. So we wouldn't trade in this, right? Meaning that this half is not valid. This consolidation, I'm not seeing nothing that I would necessarily like to see. Well, it is a buy play in here. Y'all see this? Came down. This order block was in the zone. It's on right on the edge. Consolidated. Liquidity for my entry came down 702. Boom, quick TP. However, this was risky because the trend was so high. We was pushing up so high. We were due for a pullback, but it was a good trade nevertheless. Now, back to looking at our range, seeing, okay, is there any sell opportunities we could have gotten into, right? So right here, we had this low, 2 candle close, 2 candle close, right? So this low is lower than this low, meaning we should get a pullback, right? Cool. Never came back it never retraced, never pulled back. All right, cool. Let's see if we have another entry opportunity. Move it down a little bit. Adjust this. Let me delete this right quick. Dang, marking up a chart can get messy so quick. All right, let's look in here. Is there any entry right here? Structure, breaking lows, order blocks, not in the zone, no entry right here. Now, why is this important? When I looked at my higher time frame, I determined, okay, yeah, we broke structures to the downside, but there were no entries, right? There's no way I could have even caught anything in here. Nothing was valid. Either my order block was in the zone, it didn't pull back far enough, nothing, right? So what is that telling me? If there's no entries, then maybe the chart is just aiming towards something. Maybe it's targeting something, right? If I can't get into this trade, if it's not providing any entries, right? Maybe this is just a straight shot target for something else, right? And when I'm coming to look for it, if I'm on a lower time frame, the 5 minute, if I'm looking for it, I'm like, yo, where is it going? Where is it trying to go? Boom. I'm like, all right. Well, I know this is my last low. This is my from my buy structure. This is my previous low, my newest high. I understand structure broke to the downside, which gives me permission to catch a sale. However, I understand that the reason why I place my pending orders on this order block is because these order blocks are powerful and they reject price, right? Anytime you're looking for a pullback, you want to enter off this order block because it just touches it and rejects it, right? So, and there's multiple entries that look like this. Like even in this period right here, this yellow block that I have marked up, it's the same thing, right? Right here, we broke structures to the upside. Do y'all see how it never broke this high? It never broke this high. It never really broke this low. We had structure in here that was constantly breaking, right? I mean, like right here, kind of broke to the downside, wasn't clear, whatever, right? This low and this high was the most important. How do you know this? Because I never really clearly broke above this high, and I never really clearly broke below this low. Therefore, this still stands as far as my fib is concerned. All I need to do is draw it out, right? Now, notice if you was to draw your fib from the previous low to the newest high, you saw the retracement, you would say, okay, it's at 4:45 a.m. Drawing my fib like this, right? Targeting this order block, cool. At the time that this chart retraced to where you want it to go was at 7:50 a.m. Right? So this took 3 hours. This was 3 hours, right? But again, time-based entry, what time is that? 7:55. My last 15 to the first 15. If you guys have not noticed by now, trading is time-based. These entries, these perfect entries will always come in that last 15 to the first 15, right? This quick TP, in and out, boom, clean trade, 125 pips. $1,000 one contract, you're risking $500 to make 1,000. That's a 1 to 2. Perfect, right? Now, coming back, right? Even on the 1 hour, right? This strategy, you don't have to quote unquote enter on a smaller time frame. But the reason why you do enter on a smaller time frame is because your risk is much, much heftier on a larger time frame. This is when you can trade on the larger time frame if you have the account to do it, right? If you have the account, the buying power to do so, or you really, really know what you're doing and what you're targeting, you can trade these trades, right? So, pending order on the order block, and on the higher time frame, you have to enter on the order block. You have to. It just protects your account. The reason why you enter off the order block is like a shield. All right. What if I entered off the 702? We pretty much cover this, but this increases my risk, right? The chart 9 times out of 10 is always going to come to this point, right? Might push down a little bit. A lot of times it just comes, touches this, and pushes off, right? This increases my risk. This is very, very critical on higher time frame plays, right? So boom. My risk, I'm risking $2,000, right? Versus, it's still crazy, but versus 1,700. So you save yourself $300, right? But of course, the upside to trading on the higher time frame is insane. Cool. $4,000 just like that. But again, when you're dealing with larger numbers like that, you got to know what you're doing. Got to be that much more precise. But structure of structure. Your lower time frames, when you enter on these lower time frames, right? You have account sizes that can handle it. You're going to see your break of structures first on these lower time frames, right? We have more structure to show on these lower time frames than we do on these higher time frames. We understand it takes an hour for each of these candles to form. On a 5 minute, it takes 5 minutes for each of these candles to form, right? So we're going to have better entries, and these entries are going to come at a much faster pace on these lower time frames. You're just looking for a break of structure that goes with this trend, that matches this trend. And like I said, the higher time frame will show you why you don't want to trade against the trend. You don't want to play a play that's like, all right, well, this is pretty limited, right? If I want to catch the sale, right, this order block is here to stop me. Even though, yes, it's a lot of money. Yes. But when it comes to optimizing trading, right, it's like, okay, why would I trade if I know I have a brick wall? It's like running a race, and at the end of that race, you know it's a brick wall, right? Now you can, still run the race if you want to, right? But I'd rather race, where there's no brick wall. Nothing's gonna stop me. There's no reason for me to be stopped unless I have liquidity. But also liquidity is a target. So that's actually a benefit because the markets are attracted to liquidity. So it actually helps me more than it hurts me. If it doesn't break above, I know it's going to reverse, which, yes, it sucks. It's powerful, but it's there. That's why your TP should always be at liquidity first. And then you move your stop loss up to see if it's going to break above it or if it's going to reverse. But by the time, if you're targeting liquidity, it's one of those things where it's like, it blows right through it if you have a perfect entry like this, right? Came back, we drew up our fib, came to the 702, it blew through it. It doesn't really fight it if you have it for an entry. And there's more scenarios. That trade the other day, what was it? Let's see. No. Yeah, this right here. Same thing. From the low to the high, had liquidity, came to the 702, boom, blew it out the water. It's not something where it's like more times it's not gonna sweep it. Most times, I mean, not that it's not gonna sweep it. Most times it's just gonna blow through it, right? You're not gonna see a lot of times where it's gonna be relatively equal highs, and it starts pulling back like how it is right now. Like if you have an entry that's closer to this these triple tops. Like if I had a buy, like right here, a buy opportunity on a lower time frame. Oh, wrong thing. Where if it did something like this, pull back, shot up, yeah, it's gonna clearly take this out. It's like you're almost too high not to take it out, and plus you have an entry that wants you to take this out. Um, this pretty much happened because the trend was kind of dying out. Like we were bullish for so long, died out a little bit. Bullish still, bullish. We didn't get a complete pullback right here. The trend was just dying out. It was due for a pullback. I thought I was going to do this yesterday. I thought I was going to pull back, at least have a deep retracement last night. But it didn't. And then it ended up doing that this morning. So all night, pretty much, honestly, I'm looking for a buy that's going to take out these highs. I haven't really seen a buy play like that. That's going to take this out. It's probably not going to come until maybe an hour or 2 hours from now. But that's what I would be looking for. I would be looking to take out all of this. We take out all of this. I mean, this is wick. I mean, we're wicking up crazy right here. Like it's time to sweep this out, right? After we hit this target, this would be my next target. Let's take out these highs too. But yeah, I wouldn't expect something like that to form until a few hours from now. The London session is really, really great for trading. That is at 2 a.m. And so that Asian session, London session overlap is when a lot of powerful moves happen. That is why I pretty much try to trade at night and hold those trades throughout the morning. Because those are the trades that are, I don't want to say are resetting the market, but for lack of better terms, they reset the market. And what I mean by that is those trades are usually going to be the ones that take out liquidity, right? Those are going to be the trades pretty much at night. It's just gonna take out liquidity. It's gonna shoot up one way pretty much the whole time. It's gonna be on a mission, and you're just gonna be like, it's kind of like just smashing through the walls as far as like the goals is concerned. As far as like marking up your liquidity levels, it's just gonna break it again, break it again, break it again, until you reach kind of like the morning time, like 6 or 7 a.m. That's when it kind of starts dying out. But for hours, hours, it's pretty much just moving one way. So that's pretty much why trading at night beats trading during the day. If anybody was on the charts today, I don't even think it was a real trade opportunity today. And just things that I've seen, it's been a no trade day for a lot of people. It was just not the cleanest during the day. And yeah, at the nighttime, something's always gonna come up at night. There was actually an entry for market open at 6, but the problem is, I'll just go ahead and show y'all, is that when the market opened, it took off. There was no chance to enter. Let's see, where is 6 o'clock? 6 p.m. right here. Right. So again, we love our liquidity sweeps. Came down, boom. We had order blocks in the zone. Where it was 6 p.m. Or was it this? No, I was looking at this, I think. It's one of these. Oh yeah, it was valid on the 3 minute, but it wasn't valid on the 5 minute. I don't like trading on the 3 minute. The 3 minute is there. It'll give you structure for sure. It just doesn't respect it as much as it does the 5 minute. But if y'all can see, this first candle was at 6 p.m. It just shot off, and you can't place a pending before 6 p.m. So if you see that, like this candle right here, 4:57, so it was literally frozen right here, and then literally in this 1 second, it said boom, boom, it was gone. It was like, yeah. I showed an example like this before. Anytime I like to trade market open at for 6 p.m. But if the setup is right there, you can't trade it. It just happens so fast. Yeah, I think we actually looked at it on live when we were trading live that that one time, or I think it was twice now. Where yeah, if it's an entry at 6 p.m. and it's like right there and it's that close, it's not gonna give you an entry. You can't click that fast. Um, but yeah, pretty much. Um, Other than that, let's see. Yep. So yeah, for the rest of the night, as far as looking for trades, that is what I'll be looking for. Is some break to the upside, preferably on the 5 minute. Um, if we can get a break and struck to the upside, and it doesn't even have to be much. It could just be something like this, just something to take out these highs. That would be perfect. You better hold that trade to the moon, because it's gonna be on a mission. It's gonna take all this liquidity to the upside out, and then like I said, I marked up this secondary target. If you're bold enough to hold that, um, but yeah, let's see, 8:47. It's pretty good on time. Um, let's see, let's recap real quick. So, basic foundation of structure, right? You have your trends, uptrend, downtrend, consolidation. Valid high, valid lows. You're looking for two or more candle closes in whatever direction to understand structure, right? So just look at this, right? So this two candle close, that is a valid low. I'm making a new high, but I don't really have two candle close to make it a valid high. I would like to see two right next to each other. But we could just look at this. Cool, valid low, push up, valid high, two candles, valid low, two candles, valid high, two candles, valid low. We're making a new high, right? Okay, cool. So we got our trends, understanding a valid high, what makes a valid high or a valid low, and then breaking structure, right? If we are in a trend, an uptrend, we are justified by the highs. We need to continuously make new highs in an uptrend, right? The opposite is for a downtrend. We need to be continuously making newer lows. So structure breaks when you have a high that's higher than this last high, right? Because now this becomes a higher high, meaning now we should get higher lows and higher highs. Cool. That is the basic three fundamental things you need to know about market structure, right? Now, swing highs and swing lows, you do not have to count valid highs or valid lows. You actually go by the wicks when it comes to swing highs and swing lows, right? It will be whatever that highest point or lowest point that wick is at, right? So, let me, why is, let me see. Cool, right? So, we'll mark this up like so. This is my lowest point, right? This wick right here. This will be my swing low, swing high. swing low. Oh, oh shoot. Yeah, zoom out a little bit. Swing low, swing high, swing low, swing high, swing low. We should be making a new high. That's how you understand swing structure, right? Notice I'm not looking at two candle close. I'm looking at overall trend, swing high, swing low. When I click on my smaller time frames, I should have entries that justify this, right? So I'm looking. Obviously, breaking structure to the upside. Boom, that was a buy opportunity. Cool, cool, cool. Breaking structure to the downside, I should have sell opportunities. Same thing. This helps you identify what you want to do a little bit easier. Understanding that there's going to be a set of ranges within the total range. Cool. So that's basically a quick recap of a deeper understanding of market structure. I realized while I was teaching, I'm gonna probably have to separate like order block and fair value gap. The fib into videos on these sessions that's just dedicated to that. So I'll do that next Monday and Tuesday. Monday will be fair value gap. Fibs. Next Monday we'll go over fibs. Next Tuesday we'll go over order blocks. And it's going to be just like this. It's going to be adding on basics with that kind of deeper understanding that's going along with that. But yeah, let's see. Does anybody have any questions? Oh man, I had the chat. I couldn't even see the chat. Yeah, does anybody have any questions or anything kind of confusing that you would like to explain? We got 7 minutes. I like to keep these calls to an hour. Yes, no, everybody good? It was pretty simple to understand. Yes, no, kind of lost. Cool, cool, cool. All right, Mel got it. Cheyenne got it. Where? All right, bet. Cool, cool, cool. Well, um, everybody is understanding. That's great. This will help you tremendously. As far as understanding if I'm looking for buys or for sales. We will continue to dive and dissect the charts on a deeper level. Understanding this, first and foremost, trading is simple, right? All you need is those 5 confluences plus those additional 2, which is that time-based entry and engulfing candles. But for, confluences 1 through 5, structure, fib, order block, fair value gap, liquidity, right? That's all you need. But you want to have a deeper understanding of the charts, because then you get to a point where you kind of start knowing what the chart is about to do. And you're not supposed to be able to predict the chart, right? But then it's like, man, this chart, I understand the patterns. So I can kind of see the future just a little bit, and that's honestly what I want for you guys to see, is to be able to, understand the confluences, but on a deeper level, understand the why behind it. That's the most important thing. Why is it doing this? Why? You don't want it just to see it move and be like, woe is me type of thing. Why is it doing it? It's probably always a reason. It's always a reason for something. Especially when it comes to trading, it's not that random as people try to make it seem. And once you start to look at trading like that, it becomes very, very easy. The back testing parts helps that, right? So again, if you want to trade on the 1 minute and you'd be like, all right, the strategy works. on each of the time frames, but then you're looking at the 1 minute, like, yo, why is it not working on the 1 minute? Then you click up on a time frame, you understand you're kind of trading in consolidation. You're like, oh, okay. So I can't really trust the 1 minute, right? Because these candles are moving at such a fast pace, it's not really respecting it. At least on what I'm trading, right? If I'm trading gold, I'm like, yeah, it's not really respecting the 1 minute like that. It's taking it a lot for liquidity. But if I'm trading the 1 minute on ES or on Nas, I'm like, okay, it respects the 1 minute more, right? However, on Nas, it don't respect the 5 minute like that. Usually it takes off if you're trading at the 1 minute or 3 minute for your entry wise, right? But on gold, it usually blows to the 1 minute, sometimes respects the 3 minute, but that 5 minute is a nice medium. It's like the Three Bears, the porridge. Too hot, too cold, just right. And that's what you'll come to understand in trading. Like you'll get a groove. You'll understand. Okay, this is what works. This what does not work. And that's just something that comes with the growth. With it, to kind of like to in your journey to get that deeper level of understanding. But once you get there, trading becomes a lot less like you're not as anxious, right? You're not upset at losses. You're not, because it's like you know what I'm saying? You go from a period of like guessing to knowing. And that makes all the difference when it comes to trading. So yeah, enough yap. Uh yeah. Okay, yeah. Anybody got any questions? Anything else? Just want to double back. Make sure everybody is good. Yes. Cool. Word. Well, all right, y'all. Yep, I will. Like I said, I'm looking for buys that break this upside. If I see something that's crispy and looking great, I will call it out in that trade vault. But other than that, you guys have a great rest of your night, and we will see you on Thursday.